Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to go through what may be a view of dividend stocks, where I think sometimes dividend stocks get overlooked compared to growth stocks, and some comments when it comes to having a conversation around dividend stocks versus growth stocks. Now, I have both. I would think it'd be silly just to invest in dividends or silly just to invest in value stocks. But it really comes down to your forte and kind of your goal in the end. So long term, as usual. So we'll get into that today. But if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So as usual, we'll give you guys an update on the day here. Portfolio today closed out at $10,810.62. We were down $107.58, down 0.99% for the 1 week. We are down $142.99, down 1.31%. For the 1 month, we are up $314.09, up 2.99%. For the 3 months, we are up $403.98, up 3.88%. And for the 1 year, we are up $1,760.03, up 19.45%. And for the all, we are up $2,195.46, up 25.48%. So I don't know why I thought about this, but sometimes I think dividends are kind of underappreciated or not as respected as or talked about when it comes to in comparison with growth stocks that do huge amounts of growth over a year, over 5 years, over a decade. And so I just want to talk about what awesome things are about dividends, or what really the power of dividends, and how maybe if you aren't invested in dividends, maybe you should take a look into it. And I'm just going to talk about some of the things that I hear. And so what is a dividend? First of all, a dividend is a form of a payment or a cash payment from profits of a company that is a bit more mature. You don't see dividend payments really come out of startup companies or early growth companies. These are typically coming out of more mature companies that have a ton of cash on hand and are able to pay out dividends to investors who hold a piece of that company. So if we remember what a stock is, when you buy a stock, it gives you ownership, somewhat a piece of ownership over the company. It may not be a big piece of ownership, but it's still ownership. And some companies that are able to create huge amounts of cash flow or have huge amounts of cash on hand give you a little thank you or a payment in a dividend form back in your broker's cash account, so that you can reuse that. More or less, some people use it for retirement, and other people use it to reinvest. Now, the power of the dividend is that when you get those cash payments in a dividend form, you can take that money and reinvest it in a company, which really creates a huge compounding effect. And so that is, I guess, the first point when it comes to dividends, is that you can create a compounding effect fairly quickly and quite efficiently, and you don't have to worry about not making your money back. I think sometimes as investors, or average investors, or newer investors, we forget the principle behind investing is to lend out your money or give your money out to have a return on that money over time. And so it's like people who are in real estate will buy property to create some sort of cash flow, or have the renters or tenants pay down the mortgage so that you can build equity, but also get some sort of income when it comes to rental income. Or we forget that when we invest, maybe if you're a big investor and you're investing privately, like on Shark Tank, for example, you are hoping to make an investment in a company or that person to get a return on your money that may be larger than your initial investment. And I know for the past maybe few years that a lot of people overlook dividends because they're focused on the growth, because over the past few years, maybe over the past decade, we've been in quite a strong bull market, and now we're starting to see that come down a little bit. But when it came down to the bull market, I think a lot of people saw the high growth that happened. We always hear stories about people succeeding when they're 10 bagging it or 100 bagging it when it comes to value growth stocks. And those are the only stories we hear. We never hear about the guys who lost a ton of money. And so dividend investing can be somewhat boring in that sense, but it is consistent. And we enjoy it because it gives you kind of that gratification, that instant gratification where you were getting money back from your initial investment for holding that stock. And you can take that investment or that dividend, and use it for your lifestyle, or use it to reinvest in stocks to create that compounding effect. And that's just the greatest thing. I get super excited when I get dividends. And sure, it may be a long-term growth kind of thing, but over time, that dividend grows usually every single year when it comes to certain companies where they increase the dividend per year by like 10% or something like that. But really it depends on the company, or even some companies who raise it every 2 quarters, right? I know that it's very exciting that way, but how does a dividend stock appreciate when it's so mature already usually? Well, there's this thing that a lot of people I think are still not grasping the concept of, which is called a share buyback. And share buybacks are not a metric, but a way for a company to buy back shares off the market, take them off the market, so that your piece of the pie, remember, stock that you bought is sliced up into a bunch of pies, well, slice. And so when they do a share buyback, that means there's less outstanding shares in the marketplace, and the market likes that, which gives the investor just a little bit bigger piece of the pie. But also there is a metric that is used in the marketplace to determine the performance of a company, and that is earnings per share. So as share buybacks happen, you may not see a growth in the stock price right away because it's not instant, but earnings per share will reflect that. And the market seems to like that, which essentially sometimes, not all the time, but most of the time, can increase the price of the stock because people are seeing that there's more earnings to each share. But remember, they're just taking shares off the market. But share buybacks are a good thing, and they do assist investors to have a bigger piece of all those slices that were cut up into a bigger chunk. And it's not a bad thing. So when you see a company doing share buybacks or aggressive share buybacks, don't forget that it may lag behind in stock price, but it does show up eventually, which is not instant gratification like some growth stocks where you see huge amounts of growth in a short period of time, but who knows if it's sustainable. But that is why we talk about long-term investing, okay? So long-term investing, if you truly believe in the company, this is where you got to do your research and figure out if you really, really understand the company. Is that, are they doing what they need to do to produce a product, to produce income, to produce, cash flow? And if they're not, then maybe I would consider doing more research on the company and seeing where the company's projected to going and really making a decision on your own when it comes to that. And so when it comes to dividend stocks and them being kind of overlooked in a sense, we have to remember that over time, the dividend itself does grow, and it's a instant gratification when it comes to that, and it goes back in your broker account, and you can use that dividend to reinvest or do whatever you want. And I know you're not going to get filthy stinking rich from a 60-cent dividend that maybe Apple pays or Microsoft or so on and so forth. But remember, these companies are very mature, and if you really do believe in those companies and what they're doing, I'm pretty sure when it comes to the board or the guys who are running the company really do know how to allocate their cash that they have on hand, whether that means expansion, whether that means share buybacks, and of course paying out dividends to long-term investors when it comes to the company. And so just keep that into consideration. The other thing is that I really want to address this is people that do yield chasing. And what I'm talking about yield chasing is they are typically, what they're doing is buying a stock in a company just because the yield is super high. And the yield is the metric that determines how much you're getting paid based on your investment. And it changes from day to day based on the stock price. And so some people might chase a really, really high dividend yield, and that can sometimes bite them in the butt. And a perfect example of that, of course, is AT&T. I just want to put that out there. I do not own any shares of AT&T, but there's a reason why. They do offer a very high dividend yield. However, I don't know if it's sustainable in a lot of cases. I've looked into the company, and based on what they're doing, I just don't know. I'm just really uncertain. And really, when I have that uncertainty, I'm probably not going to invest in that company. I want full confidence, but not so much confidence that I can't humble myself. And so don't forget that portion as well. Don't get overconfident just because the past couple of years you made a huge return. Really, the testing ground is when times are like this, when the market is volatile, when the market is up 8% one day, down 9% the next day, and then up 9% the next day. And over that course of the week, you only made 1/4% in capital appreciation. That is volatility. That is something that you really have to figure out if you can handle. Always look at it long term, but always don't underestimate the power of dividends, because if you can just imagine, it's winter here in Canada, and if you're trying to build a snowman, you got to start somewhere. You got to start with a little snowball. You got to roll it, and eventually it collects snow over time, and it grows bigger and bigger and bigger, and that's the compounding effect. The compounding effect works in a lot of ways, and it really is tangible when it comes to dividends, because you can see it happening firsthand when they are giving you those dividend payments, and you can decide what you want to do with that, whether it's reinvesting. If you're thinking like a business owner, reinvest into the company. Please don't underestimate dividends. I know some people even say that you need hundreds of thousands of dollars to really make dividends worth it. I just don't think that's true. They always like focus on capital appreciation. Then when you're in retirement, think about dividend stocks. But I think you should think about dividend stocks now, because if they're increasing over time, you don't want to miss out on those increases and having a higher return based on the money that you shelled out to buy that stock, right? I've talked to people who own TELUS, which is a great example. TELUS for like 30, 40 years, and they've always received a dividend over that time period, or when they started receiving dividends. And trust me when I say this, their return on investment is much, much higher because they kept on holding and they kept on receiving those dividend payments, but reinvesting, of course, into the company, and they've never sold a single share. And so if you're thinking that you need hundreds of thousands of dollars, or you need to focus on capital appreciation, I'm not against that, but always consider that there's not one single way of investing, not one single type of way of doing it. You don't have to focus on growth. You don't just have to focus on dividends. I think there's a more encompassing vision when it comes to investors, and it really comes down to your goals and what you're trying to figure out. And so just to give you an idea, I don't just own dividend stocks, but this portfolio is strictly dividends. But in my other portfolio, I do have growth stocks in there mixed in with dividends. And the greatest thing about that is when I receive a dividend payment, if I want to make a speculative, play where I want to buy a share in a company that maybe is just in the growth phase or high speculation, and I want to take that risk, it's not money coming out of my pocket. It's literally money coming from the other companies that I own, and using that capital instead of my active income, which I work a 9 to 5, and using that on a speculation. Take that stuff into consideration. Maybe build that dividend portfolio to a level where, yeah, sure, you might be only making $200-300 a year, but that $200 or $300 a year could buy you a stock that you see huge amounts of potential in, that is maybe in the growth phase and really hasn't been on the market that long, and you can use that as capital appreciation. So take everything into factor when it comes to that. Do not overlook dividends, but also don't get into the trap of high dividend yields, because that can really burn you. And really pay attention to what the company is doing, because if they can't afford a dividend, then should you really be investing in that company? Like, for example, if they're borrowing money to pay out their dividends, that's a concern for me. That's a big red flag. We have to take these into consideration. Use your brain when it comes to doing your research. Don't be blinded by horse blinders when it comes to investing. Only investing one way, because there's so many types of ways to invest. And whatever really gets you to the goal faster, that might be the way. If you want to take your time, then do that. But hopefully you guys got some value out of this video. I just want to talk about how not to really overlook the power of dividends. And you know, those get rich quick kind of scheme things can also make you get poor quick. Okay, so don't forget that. And maybe if you don't have any dividend stocks in your portfolio, maybe consider it, and maybe really research those companies that have a really high dividend yield. The exception being REITs, because I know they are a different kind of beast. But other than that, guys, hopefully you did enjoy the video. I hope you have a great week, and we'll definitely see you in the next one. Bye.